So welcome you all once again to today's section. We are going to solve a question to finalize the final account, to bring all what you have done together. So basically, that is today's section. So we'll look at the question called It's Well. It's Well Limited. It's Well Limited. Good. It's Well Limited. So let's see. It's Well Limited. Well Limited. It's Well Limited. That is the question. It's well. It's Well Limited. Now I want to solve this question under exam condition. Under exam condition. Under exam condition. So under exam condition, how do you solve this question? That is it. Great. Now let's go straight. Under exam condition, don't forget your three issue, your requirements, the trial balance, additional information, or the financial statement. So first, read the requirement first to be sure that that is the question that you are going to answer. So let's go. So let's locate the requirement section of success. So let's go down. So required, prepare statement of profit or loss for It's Well Limited for the year ended 31st December 2018. And then B, prepare statement of financial position for It's Well Limited after 31st December 2018. Now let me do a little remix. Let's assume that we are going to add statement of changes in equity. So that will be the middle, and then the financial position will be the third one. So this is how I want the requirement to be. Requirement to be A, statement of profit or loss. B, changes in equity. Then C, financial position. Then D, show your workings. So this is how I want the format to be. So we are going to solve it against this style. Great. So now we've read the requirements. Yes, so we are going to the additional information. Let's go to the additional information. After this question, I will scan through about 5 questions. They are footnotes. and probably explain how you treat them. And each one of you will try out of the five, you select one and then you try it. Good. Now let's go to the footnote. So note one suggests that the net realizable value of the inventories as of 31st December 2018 are estimated to be 9.3 million. So how do you treat this in the book? And according to IS2, inventory must be measured at what? The lower of costs and their net realizable value. So we have to go to the financial position to go and pick the cost and compare with the NRV. So what's the cost of the inventory? The closing inventory as at 31st December 2018 is 10,500. If it is 10,500, then you compare, you select the lower. You realize that in this, the NRV lower than the cost. So therefore, we have to prepare now. Good. Now, if the NRV happens to be the lower one or the right figure, then you perform some adjustment or written down. So you find a difference and add it to your cost of sales. And then you treat the closing inventory. You record the NRV or the lower value in your current assets inventory figure. Good. Now let's go to note 2. Even though it's still showing note 1, is a note 2 here. Depreciation is to be provided as follows. So assets and then the basis. Building, see the note 3 below. So building, everything about building will be explained in the note 3. Good. Now plant 12.5% on reducing balance method. Then motor vehicle 10% on straight line. And we're told that all depreciation is charged to cost of sales. If not, then we have to probably charge the plant to cost of sales, building and motor vehicle to admin or distribution. Great. So basically that is it. So now we will look at the next note. So basically, the note 2 talks about the depreciation policy, then we are done. Now let's go to note 3. Note 3 states that land and building were revalued at 14 million and 30 million respectively on January 1st, 2018. The building have 15 years remaining useful life. This revaluation has not been recorded. Wow. So you have to record this. And we said the revaluation, either you perform it at the beginning or at the end of the year. So this question, looking at the date, we are reporting when? 31st December 2018. That's a reporting period or reporting date. But when do you perform the valuation? The valuation was performed on January 1st, 2018. So clearly at the start of the year. And then you know the rules that apply when valuation is being performed at the start. Depreciation, how to find the carrying amount, and then that's all. Good. Now let's go to note 4. So basically, note 3 talks about revaluation. So either you have revaluation gain or a loss. If it's a gain, add it to your OCI. If it's a loss, add it to operating expenses. How do you calculate the revaluation gain or loss? You just have to compare. Just have to do what? Compare the revalued amount to that of the carrying amount at the date of valuation. That is it. Now note 4. During the year, motor vehicles costing 8 million were sold for 4.5 million with an accumulated depreciation of 2.5 million. Good. So let's add were sold to page 9. Great. So we can say that were sold for 4.5 million with accumulated depreciation of what? 2.5 million. This has not been recorded in the books. So what do we have to do? You have to record it. So if they have not recorded anything at all, we have to start from the 3 steps. We said that anytime there's what? Anytime there's revaluation, we have to calculate the revaluation. Sorry, anytime there's disposal, we have to calculate the profit or loss on disposal. But before we do that, there are 3 steps. Step 1, add the proceed to that of the cash. So add the proceed to your cash. So the proceed of 4.5 million will be added to the cash of the entity. Then what do? Step 2, calculate the profit or loss on disposal. Then step 3, that is the removal. Make sure that the details of the disposed assets must be removed or eliminated from the books. So from cost from cost, accumulated depreciation from accumulated depreciation, then you are done. So these are the 3 steps that you have to go through. Now let's see. Note 5. Note 5. During the year, the company received a grant of 10 million to finance the acquisition of some plants. The amount received have been credited to operating expenses account and the bank account, and no other entries have been made. It is the policy of the entity to account for grants relating to assets using the deferred income method. The plants have an estimated useful life of 5 years. So basically, we have to defer the grants of 10 million over 5 years useful life. That would be the requirements. So basically, with capital grants, if they're using the deferred method, the entire grant must be what? The entire grant must be amortized over the useful life of the asset in question. So that every year a portion of the grant must be released to the income statement to offset the higher depreciation charge. That is it. Now let's go to note 6. Note 6. Note 6 states that on 31st December 2018, a qualified surveyor valued the investment property at 5 million. Wow. It's Well Ltd uses the fair value method in IAS 40 investment property to value its investment property. So if the fair value is 5 million, what do we do? Here we say IAS 40, if you select the fair value model, first you don't depreciate the assets, but you compare the fair value at the start and the fair value at the end. Any fair value gain, you report it to what? The profit and loss. Whether gain or loss must be reported to the profit and loss. If it is a gain, add it to other income. If it is a loss, you add it to your operating expenses. So now let's see in this question, if the value or the fair value at the start of the year has gone up or gone down. So you check here, the investment property valuation, 1st January 2015, the value is what? 6,000. So the value at the end is what? 5,000. So there's what? A loss of 1,000. So what do we do? So we have to add this loss to the operating expenses. But if it happens to be a gain, then we have to add a gain to what? Other income. Because we said that revaluation or fair value gain on investment property must be reported in the other income. Good. So that is it. So here, when you go to your financial position, then you record investment property at the fair value at the end of the reporting period. That's 5 million. Now let's go to note 7. Note 7. Operating expenses include an equity dividend of 12 million paid during the year, and a further of 8 million was declared and paid on 2nd January 2019. So how do you treat this? These are two sections. So let's clear the first section. Operating expenses include an equity dividend of 12 million. So they've paid dividend of 12 million and they have recorded it in what? Operating expenses. So is that the right treatment? That dividend must be part of our operating cost? No, dividend is not part of the operating cost. Instead, it must be reported at what? The P&L, sorry, the retained earnings. That's the change in equity. Good. So it means that this 12 million must be reversed from where? The operating expenses account. So you have to reverse this from the operating expenses. That is it. Then we will take it off from the retained earnings on the statement of changes in equity. Great. Now the second part of the sentence or the paragraph says that and further of 8 million was paid on 2nd January 2019. So if you declared or paid dividend after the year end, that is event after reporting period, because we are reporting as what? As at 31st December 2018. So 2nd January 2019 becomes what? Event after reporting period, that transaction. So how do you treat dividend declared or paid after the year end? So that will be non-adjusting, right? So you do nothing. So you do as if that note is not there, that 8 million. Now note 8. Note 8 states that The bad and doubtful debt provision is to be reduced by 12% of debtors. Is to be reduced by 12% of debtors. So what do? We just have to find 12% of debtors and take it off from the bad debt provision. Now let's go to note 9. Note 9 talks about IAS 37 provisions. Yes, so I will treat that one for you. They are saying that the business sells goods which carry a 1-year repair warranty. If minor repairs were to be required on all goods sold in the year, the repair cost will be 10 million. So the entire sales. If major repairs were needed on all goods sold, great, good. If major repairs were needed on all goods sold, the cost would be 50 million. Good. So we have minor and what? Major. It is estimated that 80% of the goods sold in the year will have no defects, so that matter no repairs. 15% will have minor defects, and 8% will have major defects. So here, all what we are trying to tell is this: we have to calculate for the total warranty provision that we have to include in our books. So we are saying that if all the goods happen to be major, you need major repairs. Okay, then the cost will be 50 million for all the goods sold. If it is minor, then we are going to incur what? 10 million. Good. If it's minor, 10 million. Wow. 10 is not coming. Hmm. Now, in this question, they are saying that about 15% will score minor. Then 80% will score nothing because we need no repairs. So no defect is 80% according to the question. So 80% of the goods in the year will have no defect, 15% minor, and 5% what? Major. So 5% will be major, 15% minor. Then the remaining 80% will be what? No defect. No. If no defect, that means no repair. So repair cost is 0. So what will be the value of the provision that we should make in our book? Here, all what we are saying is this. Anytime you sell, I saying that you have to make some provision towards repairs. Maybe some of the customers will return the goods back to you. So if they have to return it to you too, you've classified the repairs into two: major repair and what? Minor. So if all the goods that you dispatch to them, if they have to return them back to you, you have to work on them. The major repair, all of them will cost you 50 million. Minor will cost you 10 million. So here we have estimated that out of the goods, it's an estimate, not real. Out of the total goods sold, 5% of the goods will be returned to us, and we are going to incur a major repair on it. 15% minor repair and 80% no defects. So therefore the value will be, so the provision that we have to make, then let's take 5% out of the total value. So 5% out of 50 will give us, that's 2.5 million, right? So 2.5 million. Then we take 15% of 10 million. That will be 1.5 million, right? Here 0%, that's 80% of 0 will give us 0. So therefore the total provision that we have to include in our book must be 4 million. We are done. What is the accounting treatment of this 4 million? Two treatments. First time provision. Add it to operating costs. But preferably it must be added to the cost of sales. So add it to cost of sales. That's warranty provision. Add a provision to the cost of sales. Second, add it to your current liability. Why? Because the provision, if not pay for it, you're waiting for them to come to bring them before you before you incur that cost. Because if they've not returned it, you can't call them that, please, let me pay this or let me repair it for you. No. Only when they return it. Good. So that's all. So when you are treating your cost of sales, you should not forget to add what? We should not forget to add the 4 million to the cost of sales. And then add the 4 million to what? Current liability, because it's a provision. Then that is. Now let's continue with the last footnote. And I was told that with the last footnote, you are very good at it. That is the income tax. Good. So here comes the question. The income tax paid 14 million shown the trial balance is the income tax agreed with the tax authorities and paid during the year with respect to 2017 year. Whilst the tax provision was 12 million shown in a trial balance as suspense. So the tax provision 12 million shown the trial balance as what? As suspense. So let's go to the trial balance. Let's go to the trial balance. Let's see. There was some updates. I think the update did not reflect here. Okay. I think the update did not reflect here. Good. So when you go to so that note states that the income tax paid, which is 12 million shown in the trial balance, is the income tax agreed with the tax authorities and paid during the year with respect of 2017. We are preparing the financial statement for 2018. As soon as they start mentioning last year's tax details, they are just drawing our attention to what? Under or over tax provision. While the tax provision was 14 million, showing a trial balance as suspense. So let's go and see if that suspense is there. So suspense 14,000, good. Tax paid 12,000, great. So to create under or over tax provision. So that is it. Now the last bit says that the accounting base of some assets was 380 million, whilst their tax base was what? 360 million. Corporate tax rate is 25%. So what do? We have to find the temporal difference and calculate what? The deferred tax provision at the end of the reporting period. So that's the end of the footnotes. Then you are done. So let's go to the trial balance and scan through the trial balance. We are scanning through for two items, usual and unusual item. So turnover will be turnover will be as the net sales. That is the sales revenue. Cost of sales usual. Operating expenses usual. Trade receivable usual. Bank. This time I look at where the bank balance has been stated. It's at what side? Credit side. It suggests that it's what? Bank overdraft. That's a current liability. So take note that the bank, you add it to the current liability. Good. Closing inventory. Closing inventory on 31st December. That's the cost. Interest paid 500. Rental income from the investment property 1,200. Plant and equipment at cost. Accumulated depreciation plant. Land and building at cost into bracket land 18. So it means that out of the 63,000 there, the land element is what? 18. The remaining portion is what? It's for building. Anytime you see the examiner doing this, it tells you that you should not depreciate what? The land, because freehold land are not to be depreciated, but we depreciate leasehold land. We don't depreciate freehold land because it does not have a useful life, estimated useful life. No, you cannot determine. You cannot tell her this land will last for 5 years. You will go and the land will still be there. Good. Accumulated depreciation on building 12,000. Investment property valuation 1st January 2018. Great. Okay. Trade payables. Yeah. With the trade payables, you can carry there. It's one of the figure that so far it has been free. No note will affect it. Most often. Most often. Motor vehicle, 18,000. That's the cost. Accumulated depreciation is there. Bad debt. Bad debt in the trial balance. You add it to operating expenses. It ends there. Except for if it's in what? The footnote, where you have to less it from the receivable and add it to operating expenses. Directors remuneration. Directors remuneration. Yes. To form part of the operating cost. Auditor's fee, it will form part of the operating cost. Tax computed on taxable profit. That is the current year tax, and you add it to your income tax expense, and it ends there. Good. Suspense account, we talk about that. Now, anytime you see suspense in a trial balance, they have to tell you the source. Other than that, your financial statement will not balance. Good. Then tax paid during the year. So the ordinary share of 25 pesos each. as a share capital. 20% debentures. So there. Provision for bad and doubtful debts. That's the open balance of the provision. Retained earnings. That is the income surplus balance as at 1st January 2018. Then revaluation surplus. We are done. So now when you do this in exams, at least about 75% of the question will be part of you. So that when you go to the board or when you go to your answer sheet, you will remember everything, right? And this should take you maximum of 5 minutes. Meanwhile, we have used what almost 30 to 45 minutes to go through. Yes. So it tells you that you have to be extra fast. Good. So let's see. Um, this is how I expect the solution to be. So as you have you market your book. So let's assume that this is the page 1, page 2, page 3, page 4. So that's the leaflet of the answer booklet. So what you do is first the page 1, your P&L. Page 2, your changes in equity. Page 3, your financial position. Page 4, your workings. That's all. Then you start. So that if there's a figure that you think you have to post on the balance sheet or the financial position, you post it there before you forgot about it. So by the time you finish the profit and loss, the straightforward one has been posted already. So left few calculation of few workings that you have to do to just balance it off. Then you move on. In fact, if you finish, you realize that you post most of the entry to the financial position, then there's no need for you to continue again to balance it. Move on to the next question. So this is the strategy. Just that unfortunate for us, my board is too small and then cannot contain all. So humble advice, you open 4 sheets. So you will do it at the same time, load. So basically that is it. So the first page must be profit and loss. First page must be profit and loss. Then the second page have to be the just so we will start, and don't forget the 3 protocols: the name of the company, the requirements, and the reporting currency. So that is it. So I will start, but make sure that you've opened up to the 4 pages at the same time. All the 4 pages have been opened. So that by the time you finish up to profit after tax, it posts a lot of items. So let's see. So first, page 1, to write on top the name of the company, it's Well Limited. As the examiner quoted it in the exam question, the same way you should copy it, because solution to every question is the question itself. Good. So let's just copy as has been posted to us. So it's Well. So I'll start by saying it's Well Limited. Up. Okay. Let me push it to top. Wow, I think we have a full board today. We do have a full board today, so I'll push it to the top. So it's Well. Limited. It's Well Limited. Good. That's our page 1. Then statement of profit. Statement of profit. As the examiner quoted it, the same way you have to also copy it. If it's a statement of comprehensive income, you have to also quote the statement of what? Comprehensive income. Good. So statement of profit or loss and other comprehensive income. But he quoted statement of profit or loss. Should not add trouble for ourselves. He just says statement of profit or loss. So we do the same thing. Statement of profit or loss for the year ended. For the year ended 31st December 2018. Well done. Then a reporting currency. So Ghana cedi. Then you check whether 3 zeros, whether we are reporting in thousands or just millions or just flat currency. So let's go and see if $3 has been raised. Okay, so when I check here, I can see 3 zeros here, so I have to also raise the 3 zeros. Kindly check first. Good. So I'll put the 3 zeros here. We are done. Now what do you do again? Then I'll pause. Go to the next page. That's the page 2. So go to the page 2, and then let's record the statement of changes in equity. So go to page 2, and then over there, call statement of changes in equity. First of all, the 3 protocols must also work there. So the name. So let's record there. Okay, let me do my page 2 here. So let me demarcate it like this and then do my page 2. So I know this is my page 2. I'll go there and write it's Well. Well Limited. Good. And the line 8, tell the examiner that I'm doing what? Statement of changes in equity. So statement of changes in equity. Let's put that one down here. For the year ended, good. So for the year ended 31st December 2018. Then you end it there. Go to the third page. Then we come to the third page. You tell the examiner. So it's Well Limited. It's Well Limited. On line 8, tell the examiner that is the statement of what? Financial position, assets, all the financial statements. We head them by saying for the year ended, except the balance sheet or the financial position, which is assets as at 31st December 2018. Good. Then you are done. Your currency, don't forget, Ghana cedi, $3. For the balance sheet, you can pick 2 or 1 for balance sheet. But for the P&L, we need only 1 column. Then you go to the page 4, my workings. So first 5 minutes to read through the question, 2 minutes to set the tone. So this one take 2 minutes for you to record all of this. Then you start. When you do this, you can start from anywhere. You can even start from the financial position. Yes. You can start from that section. So now let's kickstart the entire game. So where do you start from? Now after doing this. Definitely some of the notes you might not be able to digest it well. Definitely some of them to be your good notes that you are aiming for, and it was there. That one you last more, you continue. Now you start from your revenue, your profit or loss, and provide some few items there. If it's when we scanned through the trial balance, we saw revenue, right? So we go to revenue. We saw turnover. So we go and then pick it and then we attend. Good. Okay. So in this question, they give us the turnover, right? So I record the turnover and put it there. So turnover 213,800. So turnover. So 213,800. That's the sales. So sales, net sales, revenue, sales revenue, turnover, they mean the same thing. Well, that's what we are looking for first. Then second, we go to the cost of sales. Good. Now we tell the examiner that is working towards 1, our first workings. So let's go and do work on that. If you go there and you think cost of sales delaying time, move on to the next one, operating expenses. If it's delaying you, move on to the next one, other income. If it's delaying you, move on to the profit before this entire. By the time you finish, you are done. At least you've done something. And for someone to delay your time. Other than that, you have some time to solve the other section. Good. So I'll take this section off and then do my workings here. So let me put the workings up a bit so that. So workings, first one on the list, cost of sales. Cost of what? Sales. So that one too, don't forget your currency, 3 zeros. First, tell the examiner that per the trial balance. What's the cost of sales because per the trial balance? So let's go and pick the cost of sales figure per the trial balance. Good. Now the cost of sales figure is what? 130,800. 130,800. So let's go and put it in. 130,800. So I'll record it nicely. Then you ask yourself, when you are reading the notes, which of the notes they say that will affect the cost of sales? So any of the notes that they mention cost of sales, relocate it again and treat it. Ideally, we saw 2 of the notes that will affect the cost of sales. You can tell me the first one. We mentioned 2 items that will affect the cost of sales. 2 items. in this note. Hey, inform me one again. So make him three. Okay. Tell me one where they've mentioned cost of sales or any item that you suggest strongly it must be part of the cost of sales in the footnote. So first, you check whether there has been what inventory written down. So check the NRV of the closing inventory, that of the cost, whether the NRV is a bit lower than the cost. And this one, yes, indeed, it's true. The cost of the inventory on the trial balance is 10.3 or 10.5 million, but it's 10,500. That is the cost. But the NRV happens to be 9,300. So what do you do? So therefore, that inventory must be what? Written down to the NR, which is the 9,300. Or it must be written down by the difference, the 1,200 might be written down. And we said that this figure added to what? The cost of sales as what? As an expense, direct expense. So I'll come here and tell the examiner that inventory written down, open my bracket nicely. Tell the examiner that it was 10,500 less 9,300. I'll get 1,200. I'll put it here, 1,200. That's the inventory written down. Another note again. We are touching the straightforward ones. There was depreciation. We will consider depreciation line because the examiner said all depreciation must be charged to what? Cost of sales. The depreciation must be part of the cost of sales. I also saw warranty provision, right? And we calculated we have 4 million, right? The warranty provision. Okay. So that'll be workings within workings. So the next one is warranty provision or provision for warranty. Good. Now that'll be workings number 2 or workings number 1B. Then this one become 1A. So let's make workings 2. Let me do my workings 2 here. I'll take it off. I'm just bringing back how we arrive at the 4,000 or the 4 million in the notes. Good. So that's note 9. Note 9, which states that the entity provides for repairs after sales. If all repairs are to be major, then the repair cost will be, let's raise the three zeros in thousand. Repair cost will be 50,000. Wow, that's 50 million. If all costs happen to be minor, then the repair cost will be 10,000. That's 10 million. We're told that 80% of the goods, or for the 80% was no defects. We're told that 80% of the goods no defects. So no defects. Repair cost will be 0. Then 15% minor, and then 5% was major. So that means we have to make provision of 5% of 50,000. That will give us 2,500. The 15% of 10,000, that will give us 1,005. This one is 0. Giving a total provision of what? 4,000. So you come here and put the 4,000 in, then you adjust cost of sales. Now you go to your current liability. So let's go to the balance sheet. The financial position that we have here, we have to demarcate it. Yes. So you write your non-current assets, you do like, let's say, 5 lines. Go to current assets, another 5 lines. Go to equity, another 5 lines. Go to non-current liability, 4 lines. Then the rest, current liability. You take the remaining section. Then record what? Provision for warranty, then put it there. Don't wait for you to finish the paper or for you to let them say 2 minutes before you're going to put it there. Once you've calculated it here and you know that you go there, after making it here, just complete the double entry so that to balance for you. So let's do that. So go to your financial position and count. I think I'll do it here. So I'll take these workings off and move on the game. So kindly go to your financial position, then record non-current assets, underline it. In fact, over there, you can even create a section because there are about 4 items that will go there. Only 4. 1, PPE, that one is a must. PPE. After PPE, either there will be investment property or intangible. So either intangible, investment property, then long-term investment. Long-term investment. So these are the 4 items. So, well, I said I leave 5 lines and then non-current assets because of emergency purposes. They leave 5 lines empty, but now you don't know what be there. So leave 5 lines. Good. Now let's go to the so after the 5th line, analyze it, make it empty like this. Then go to the next line. Then you record current assets. So the next line, record current assets. That one you can start. Current assets, you know what? The big 3, record them first. Your inventory, so right after the current assets. So after the 5 lines for non-current assets. So I hope you've done that. Okay, good. So let's go to the current assets. So I'm assuming that I'll be at the same position. My current asset. When you call your current assets, but it's supposed to create, let's say, five space. First one, write the inventory first. So under your current asset, write the inventory. Write the trade receivable. Then you leave the 3 lines there. You leave 3 lines more. Then you underline on the 3rd one. In fact, the inventory, you know it already because it said that the NRV must be reported in the financial position. Don't wait till you finish the P&L. Time might not be at your side. How many minutes will it take you to post this 9,300 to the financial position than for you to wait before? So you go there and write inventory 9,300. So even though you are not finished, you are done with only one note. At least you are able to record it both financial position and the P&L. If you end there, the entries, you score them correct. These are the entries that you are looking for, not the balancing. So inventory, I've already recorded 9,300, so record it there for me. Trade receivable, leave it empty. Now after the trade receivable, you leave 1, 2, 3. On the 3rd one, underline it, leave it empty. Have you seen? Because we are not going for balancing. So in fact, then beneath it, the next one, write total assets. So beneath the total current assets here, the total here, beneath it, write total assets. I hope everyone is with me critically. Yes, we are the critical point. So you write total asset there, right? Good. So, but I don't have space here. I'll do it. So, total assets. Now let's go. After total assets, where do you go to? Equity, right? So write equity and underline it. Equity. Equity to leave 5 space. Five lines for equity. 5 solid lines for equity. 5 lines. So after equity, I'll count 1, 2, 3, 4, 5. On the 5th one, and I'll underline it and get a total. Good. Perfect. Then you go to after equity. After equity, record non-current liabilities. Non-current liability leave maximum of 4, minimum of 2. So non-current liability leave, let's say 4 or 3. Let's make it 3. For non-current liabilities, 3. So leave 3 lines. Good. 3 lines. Then on the third line, underline it and like one line it and put a total there. More I sent you. Then the next line you record current liability. The next line you record current liability. Now here, I don't count anything because that's the last end. So now you can leave it like that. So any figure that will go to current liability, go there and record it first. In your current liability, one of the guys that no note will affect it is a trade payable. So under the current liability, record the trade payable first, or creditors, trade creditors or trade payable. So you record that one first. So let's record the trade payables. Just the name. If you got the figure, then we record it from the financial position. So the trade payable figure in this question, you have the handout with us. Let's see the trade payable. The trade payable figure happen to be, you're solving this an exam conditional. You have to be fast, extremely fast. Within 30 minutes, you have to finish this question. 30 minutes maximum. Minimum of 25 minutes. That's if the question is yours. Great. Trade payable. I can't see trade payable. Okay. Can't see trade payable. No, trade payable, they are here. That's 11,000, right? Okay, so you got that one. 11,000. Put it there. No to affect it. So even if you should end here, that fascinating of fruit, at least you done something for us. We are done. So now, anytime we said, okay, this item will go to the financial position, we will not use our map to say it. We'll go and record it there. Go and put it there. So by the time you finish the profit after tax, at least about 60% of the item has already been posted. Left is just 40% for you to finish. Good. So let's continue the game. Now let's back to the warranty provision. We said that the warranty provision will be what? An expense at the same time current liability. So now let's go to current liability and put it there. So put it there for me nicely. So go to current liabilities. After your trade payable, you write provision for warranty into bracket 2 and put a 4,000 there. How do you get it? Great. So even if you should end here, this is not an ISO. If you leave the balance sheet empty, it's an ISO. You are insulting the examiner. Yes. Good. So that is it. Now let's move on. I wish if you not record anything, you change in everything. You go there. You quit. Now we have to do the same for the change in equity. I think I'll do that one after the profit after tax. For the change in equity, you have to look for the equity items. Look for the equity items in a trial balance. That's the stated capital, retained earnings, income, or income surplus, and then the revaluation reserve. So now we are done with that note. Now let's go to depreciation. So cost of sales. Cost of sales. They said depreciation must be charged to cost of sales. You have to what? Add it to it. Agreed. Good. So let's see. So let's record here depreciation. Is it coming? Okay. Good. So depreciation. Depreciation. Do like this. And then list the item that are going to depreciate them. The first item on the list, you go to the custom and then you pick them as if recorded it there. Let's go. So first item on the list. Hey, if I stand right here, somewhere I can't see anything. In fact, if I stand right, there's some way. Can't see anything here. Some indicator though. Just avoid the trace. Great. Now, if you go to the footnotes, say depreciation is to be provided as follows. Building. See the note below. So let's go to note 3. Now, land and building were revalued at 14 million and 30 million respectively on January 1st, 2018. So here we said the valuation was performed at the beginning. And the building have 15 years remaining. This revaluation has not been recorded. Great. Now, we said that if valuation is being performed at the start of the year, then depreciation must be based on what? The new value or the fair value. That's all. Because that's the value that will travel right at the start of the year. The asset name or the asset value was changed. So therefore, depreciation must be based on what? Based on the value here in that order. Perfect. So the depreciation must be based on the fair value given to us with the useful life of 15 years. Now what do we do? So here we have to depreciate only the building, and the value of the building is what? 30 million. And it's going for 15 years. So what would be the depreciation charge on building? So depreciation on building would be facts on building. Let me see that right now. So building, tell the examiner that it's nothing by open the bracket 30 million, that would be 30,000 divided by 15 solid years. 15 solid years. And that will give us 2,000, right? Great. How big get that? For the way the thing is scattered there, let's see if you can see that section clear. So that's 2,000. Now let's move on the game. The next asset that we have to depreciate is the plant. 12.5% on reducing balance method. On reducing balance. Let's go to plant. But let's look for the asset that they sold. Okay, they sold motor vehicle. Okay, so when you get there, we will do the removal. So let's go to the trial balance and locate the cost of the plant and the accumulated depreciation of the plant. So plant and equipment, the cost is what? 36,000 and accumulated depreciation is what? 5,600. So therefore, the depreciation charge for the year will be the 36 less the 5,600 times the 12.5%. So I write here plant, open my bracket, tell the examiner that is the 36,000 less 5,600 times what? 12.5%. Agreed. So what will be the answer? Where's the calculator? Okay, the calculator is here. So 3,600, 36,000 less 5,600. That'll give us 3,400 times 12.5%, so 0.25. If your answers are ready, can share with us, friends online. Good, 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 good. Okay, so 3,800 is the answer. We shall take it off of, but let me copy this more. So I have 3,800. So we are going. So we are going. Let me squeeze it small here. Now the next asset on the list is what? Motor vehicle. So, but all right, let me put myself in trouble. So motor vehicle. Now motor vehicle is on straight line. So let's see. It's a motor vehicle, 10% on what? Straight line basis. So let's go and pick the cost. Motor vehicle, the cost is what? 18,000. And if I pick this 18,000, all I have to do is strike the 10%. Just that they sold some of what? The motor vehicle, which must be subtracted or eliminated or removed so that we will depreciate the remaining assets. Good. So let's go to the footnote. Note 4. During the year, motor vehicle costing 8 million were sold for. So we have to take off the 8 million from the entire cost. So all the assets, all the motor vehicle, the cost is 18 million. And they sold some. And that group, the cost is what? 8 million. So therefore, what will be the cost of the remaining 10 million? Perfect. So the depreciation must be based on the remaining 10 million, not the entire 18 million. So try to examine that 18,000 less 8,000 all times your 10%, and now give us 1,000. We are done for the cost of sales calculation. Good. So we put all this together, then we will get the cost of sales. So let's see. The cost of sales will be putting all this together. We'll have cost of sales of, that's 130, 800 130, 800 plus 1,200 plus 4,000 plus 3,800 plus 1,000. Great. That gives us 140, 800 confirmed or agreed. So 140, 800. 140, 800 agreed. Kindly confirm for me. If great. So this will give us 142,800. So that's the cost of sales figure. So now let's go up to include it. So up, 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 up. Great. So it's like we've opened our page now. Good. So 142,800. When I take it off, what will be the gross profit? So the gross profit will be so you will get 73,000, right? But in fact, it's 71,000. I still use my old 140,800. Okay, so 71,000 is the gross profit. So let's call it gross profit. Great. Then what do? We go to the operating costs. So from here, the operating costs. Operating cost to, as usual, I have to do some small workings there. Then we add that. So that's workings number 3. So workings 3. So let's go to workings 3. And let me take the workings off. They're looking horrible. Don't you see them? Workings 3. This one is nice. So workings 3. Call it operating expenses. So operating expenses. Don't forget your currency. Great. So per the trial balance, what is the operating cost per the trial balance? When we pick the trial balance, the operating cost will be the operating cost 22,400. So per trial balance 22,400. So per the trial balance 22,400. Good. Then what are the items that will affect the operating expenses? So here, let's see. Is there any part of the note that where they've mentioned operating costs? One of the notes says that Let's go there. That's note 7. It states that operating expenses include an equity dividend of 12 million paid during the year. Now, when you pay equity dividend, it is not an operating cost. It's an equity item, not operating cost. So let's take it out. It include, so let's take it out. So let's take 12 million. So that's 12,000 out of the operating cost. So I write dividend error. So equity dividend 12,000. That is it. Is there any other place where they've mentioned operating costs? If not, then you have to perform two tests. Now, in fact, what we have to check first is the trial balance. For the first section is the trial balance. We have to scan to the trial balance from the very first item to the very last item to see which of them will be part of the operating expenses before we even go to the footnote. So first, let's go and check through the trial balance. That's the first thing we have to do. So check through the trial balance first before you tackle anything in the footnote. So this one, of course, what we call authorities. We have jumped to the trial balance. Sorry, the footnote quickly. So let's check from the trial balance. Right after picking the operating expense from the trial balance, so move on. Please check it one after the other to avoid oversight. Oh, I didn't see this in the trial balance. No, I'll not accept that. So one after the other. So trade receivable, no. Bank, no. Closing inventory, no. Interest paid, no. Rental income, no. Plant, no. Accumulated, no. Land, no. Accumulated, no. Investment property, no. Trade payables, no. Accumulated, no. Bad debt, yep. So bad debt, 2,000. So bad debt. Bad debt, which is 2,000, right? Then next item on the list. Right after bad debt, we have director's remuneration, auditor's fee, 4,000 and 6,000 respectively. So director's remuneration and auditor's fee. So director's remuneration, 4,000. Auditor's fee, 6,000. Auditors are charging more than directors. Mm. Okay. Then continue with the scan. Don't distort it one after the other. So you are the auditor's fee. So from auditor's fee, we go to where? Tax computed on taxable profits. That one, nope. Come on its own. Suspense, nope. Tax paid, nope. Honorary share, 20% venture, no. Provision for bad and doubtful debts. Good. Here we only record the movement. So let's go and do the provision for bad and doubtful debts so that we can record the difference. So the next working that we have to do is what? Workings 4. That is provision for bad and doubtful debt. The open balance is what? The open balance is 3,000. So I'm going to record it. Open balance is 3,000. So let's go. Then, in fact, let me do the workings 4 on top here. So workings 4. Write the 4 here. Tell the examiner that I'm going to work on provision for bad and doubtful debt. As usual, open balance is neutral balance. Happen to be 3,000. Bring it. What do you do again? The movement. So locate the movement. The movement. But before you get the movement, you have to go and look for the closing balance. So the closing balance, we go to the footnotes and they will tell us that. Good. Yet you shouldn't forget the 3 zeros. Must follow us. Everything we do. All the workings. So now let's see. So when we pick the footnote, let's go to the footnote. Note 8. The bad and doubtful debt provision is to be reduced by 12%. So of debtors or of receivable. So 12% of what? Receivable. So all what you have to do is we have to look for the receivable figure and strike 12%. But here they say reduce by, and here we say by is the movement. By means the difference. So that's what we go to the P&L. So that means we have to send that figure straight to the financial, the P&L. Great. So let's go and pick the debtors figure and strike 12% on it. And that is the movement. So debtors figure from the trial balance. That's a trade receivable, 13,500. So we have to strike 12% of 13,500. And it must be reduced by. So let's go. By means the movement. So here, what do you do? So that means that's the figure that will come here. All right. We call the P&L into brackets. This is another balancing figure. Instead to be 12% times 13,500, and that will give us 1,620. Good. So 1,620. Now the examiner said we have to reduce the provision by this amount. So reduce means we will subtract, right? So that we can get a closing balance. Have you seen how the game can be nice? We are expecting the closing balance. Now they have given us what? The movement, so that we can also find the closing balance ourselves. So what do? We find the difference. So 83, that is good. Now we said that the movement goes to the P&L, preferably the operating expenses. The closing balance goes to the financial position. So let's record it. 2 entry. So in fact, if you can do 1 note fully or 3 of the notes fully, that's all. At least out of the 10 notes, make sure that 4 of them you can do it fully, 4 full, and then 3 of the notes you can tell something small about it, making 7. Then 2 of the notes, no idea. That one, no idea. That one do what you call permutation. You bring the figures that in that note, you add and subtract, no division. You permute them. That's all. Now let's record this. So right here, provision for bad debt. So I'll continue the game. provision for bad debt. Now record the difference, 1,620. If it is negative here, it must also be what? Negative here. That's all. You can also inform the examiner that reduction in provision for bad and doubtful debts. I don't want trouble, like myself. Just write provision for bad debt and put it on negative, okay? You are saying reduction. Maybe it wasn't reduction though. Examination pressure caused that. So just record provision for bad. If it's negative, put inside negative and then put inside brackets first. Then you are done. Now go to the financial position. We said that the closing balance must be subtracted from where? The trade receivable, right? Good. Now let's go there. Go to your page 3. Your financial position. Go to the trade receivable. Open a bracket and bring the balance in the trial balance, which is the 13,500. Then less the closing balance. What's the closing balance? 1380. So open a bracket. When you go there, open a bracket. So how do you do it? So assuming that if you recorded trade receivable, open a bracket, tell the examiner that it is nothing by 13,500 less what? 1380. Then put the answer there. You are done. So have you seen? I just be pushing. So by the time you finish the income statement, the balance sheet or the financial position too, you've done something over there. Shouldn't wait because you spend like 20 minutes or 25 minutes for the P&L alone. Trade receivable is 13,500. 11,000 is for the trade payable. 11,000 is for the trade payable. Great. Okay. So what do you get? 13,500 less 1380. Then you put the final answer down. Now let's move on with the game. Now let's be sure that we've taken everything from the trial balance. Yes, taken everything. Now what left? What left will be the two stubborn guys. There are two stubborn guys that we have to look out for. What are they? Before you close the chapter of operating expenses, please and please again, test for two things and be sure that you are safe. Not coronavirus test, no. But here, evaluation gain or loss. Because if it's a gain, it goes to where OCI. What if it's revaluation loss? It will be where? Operating expenses. Then second, profit or loss on disposal. Because if it is a profit, go to other income. If it's a loss, come to operating expenses. Don't wait till you get to other income. Then you calculate your profit or loss on disposal and realize that it is a loss. It means that operating expenses is wrong. That one you know, you are aware. that what I've done is wrong, but time is not there for you to go back, go and change it. No, I could have weathered that. So let's go and calculate the profit or loss on disposal. That's the next thing that we'll do. Then after that, we'll do the revaluation gain or loss. So by the time you finish this profit after tax, you realize that you've put about 70% of the items there. What left are what entries. So let's see. So workings number 5. Profit or loss on disposal. Workings 5. Workings number 5. So workings within workings. So workings 5. Workings number 5. Profit or loss on what? Disposal. That's in 2 items that you are looking for. Proceeds, how much they sold the asset for. So proceeds less the carrying amount. So less carrying amount, that's C. Now what is the proceeds? How much they sold the asset for? In this question, they sold it for 4,500 Ghana cedis. That's 4.5 million. What is the carrying amount? Let's go and take the carrying amount from the footnote. We know that carrying amount is equal to cost less accumulated depreciation. However, the accumulated depreciation might not be given to you freely. You have to calculate it. Like in Puntio. So in Puntio, question number 3, it was not given out free. You have to calculate it yourself. So note 4. During the year, motor vehicle costing 8 million were sold for 4.5 million. So the proceeds is what? 4.5 million. With an accumulated depreciation of 2.5 million. This has not been recorded in the books. So it tells us that we have to do all the 3 steps. Step 1, add the proceed to your cash balance. So let's go to the statement and add the proceed to cash. However, in this question, there's no cash. Instead, they have a bank, right? So let's assume that they receive the funds through the bank. You can also add it just the cash, but let's offset it with the bank. Now you see the bank balance there is at the credit side. So this is overdrafts. So they have received 4.5 million, which has not been recorded. So let's use that one to offset some of the overdraft, right? You can also treat them separately. All of them will balance nicely for you. Because the examiner did not inform us the medium, whether they sold it for cash or check. Here we assume that they sold it for check and the funds has been deposited to the account. So let's go and record the cash of 4,500. Let's go and add it to the bank balance. Just that the bank balance here is a negative balance overdraft because at the credit side. So what do we do? So they have a negative balance of 8,900 and then there's a good news or cash of 4,500. So what will be the net balance of the bank? So it means that we have to go to the financial position. Overdraft will be part of the current liability. So let's go to current liability. So let's go to the current liability and record bank overdraft. So let's go there now, bank overdraft. Then open your bracket. Tell the examiner that the overdraft is 8,900. Just that they've sold some motor vehicle with a value of what? For 4,500, which has not been recorded. So let's record it. So when you go there, kindly add this 4,500. Just that here, I'm not going to add, you have to offset it. So assume I'm doing that, I write bank overdraft here. Open my bracket nicely. That is now that I have 8,900 less 4,005. I am using the proceeds to offset some part of the bank overdraft. However, you can allow the bank overdraft to be on its own and the cash to be on its own. Then you put the remaining balance there if that's all. If there are any other item that will affect this. There was another note that they received cash. Okay, so that is it. So now let's go ahead and calculate the profit or loss on disposal. So how do you do the profit or loss on disposal? So all what you have to do is to bring the proceed of 4.5 million. What is the carrying amount? It's the carrying amount is equal to cost of 8 million less accumulated depreciation of what? 2.5 million. Agreed. Good. So therefore, carrying amount of the asset will be open a bracket 8,000 less 2,500, and that'll give us 6,000, 5,500. Agreed. 5,500. So will it be a profit or it will be a loss? So yeah, there'll be what? Loss on disposal. Why? Because the current amount is more than the proceeds. So loss of what? 1,000. So in this question, if you get to the other income before calculating this, you'll be in trouble. That means the loss. It must be part of the operating cost. So let's go and add it to the operating cost, lost on disposal. So you go to operating cost, then you put it there, lost on disposal. Open your bracket nicely, examiner, go to reference 5, you see there, 1,000. Just add. Just add. Great. Now let's continue the game. We said that we have to test for two items, profit or loss on disposal, or what? Revaluation gain, or what? Or loss. So let's go to the next workings. Working number 6, revaluation gain or loss. All of this must be done within 30 minutes. So we have to be fast. Even if you go there and there's something delaying you, just leave that item and move on. So workings number 6, right? Okay. Go in. Working 6 is gone. Now let's go to workings number 8. That is one. That's fine. So workings number 6, revaluation gain or loss. So revaluation gain or loss. Like I always say that first start the calculation, you didn't know whether to be a gain or loss, unless you are the other type of people. That one you can see it in advance. Now let's go and calculate it. Here too, we need two items, right? What are they? Hey, it's not coming. Oh, sorry. Sorry. We need a revalued amount. Now, what are the items that they did the valuation? The valuation was on land and building. This year, put all of them together. So let's go to note 3. We are told that the land and the building were revalued at 14 million and 30 million respectively. So together we have what? 44 million. You have to separate land from building if and only if you are going to calculate depreciation. After depreciation, they are one. It's when you are calculating depreciation that land need not to be depreciated. So that's why you need a breakdown. After depreciation, in fact, in reality, can you have a building without a land? Not at all. So they are together. Wherever you see building, it must be on land or on something. Good. So that is it. So the revalued amount to be 44 million. Put them together. So revalued amount to be 44 million. So that is that into brackets 14,000 plus 30,000. Now give me 44,000 less the carrying amount at the date of valuation. How do you find the carrying amount? In this question, the valuation was performed at the start of the year. Good. So if the valuation didn't perform at the start of the year, how do you get a carrying amount? Then to get a carrying amount, this is a fair value. We need the cost, the original cost in the trial balance less just the open balance of the accumulated depreciation. Accumulated depreciation as at these days. That's all. And all of these figures will be in the trial balance. So let's go to the trial balance to pick the cost of the land and building. So land and building at cost. Store land 18 million. The remaining part is there. Once we are not going to calculate any depreciation, we have to pick the full, the entire, which is 63,000. So the cost of the land and building is 63,000. Then the accumulated depreciation on building alone is 12,000. So what will be the carrying amount? So the carrying amount will be the cost less the accumulated depreciation at the beginning. Because the valuation was performed at the start of the year, we only pick the accumulated depreciation at the start of the year. That is also 63 less 12. Open my bracket nicely. Set the number that is nothing by 63,000 less 12,000. And that'll give us 51,000. Good. What do we do? We left it right. That's the carrying amount. So will it be revaluation gain or it will be revaluation loss? So revaluation loss of what? 7,000. Agreed. Agreed. Revaluation loss of 7,000. So tell the examiner that this is revaluation loss. So that means this question, the examiner is so dangerous. So if you don't test this, you get to the OCI, fair calculated valuation gain or loss, you had loss. So that means your operating expenses is wrong. Profit before interest and tax is wrong. Profit before tax is wrong. Profit after tax is wrong. Right. It's like you know the harm, but there's no time for you to rectify it. So what do? You close your eyes on it and move on like that. To avoid that, kindly go by this approach. smart. Even if you cannot calculate the revaluation gain or loss, try something. Put it there. At least you've attempted it. Good. Let's go and add it to the operating expenses. So revaluation loss workings number 6, and that is 7,000. I'll put all of them together. In fact, let's come to the footnote and see and be sure that you've cleared everything. So before you close the chapter, make sure that you've cleared everything. So let's see. From the footnote, so let's go to the footnote. Note 1, nope. Note 2, nope. Note 3, done that. Note 4, note 5, grant. Yes, note 5. Let's see. There's mentioned some grant be here. Wow. Have you seen? Good. So you have to scan through all before you close the chapter. Note 5. During the year, the company received a grant of 10 million to finance acquisition of some plant. The amount received had been credited to the operating expenses and debited to the bank. The debit side is correct, but the operating expenses, no way. They have subtracted it from the operating expenses as if it is what? Revenue grant. But this one is called capital grant, is to cater for acquisition of what? Plants. So this one, you don't need to worry. So it means that it must be reversed. So yes, so that means the operating expenses will be affected. So if I've closed it, let's go and then open it again and continue. So you have to reverse it. They have credited it. Credit means they have what? Subtracted. So you have to add back. We are reversing it. This one's error. They are just going to reverse this and do the right treatment. That is all. So let's reverse it. So if I'm going to reverse it, 10 million must be added back to the operating expenses. That's the reverse. So I'll go here and record grant. Hey, an operating expense, if item is affecting it too. Wow. Grant. So I'll come here and record grant. Error. Fact error. 10,000. I'm adding back. Let's continue scanning through. If there's any item that we have to. So that's how you're supposed to do the exam. So other than that, you may omit some of the items. Yes. And then note 6. Note 6 too also affect the operating expenses. I like this question. The operating expenses was intentionally loaded. That's why depreciation has to be added, because if you add depreciation to this, then it's too much. Now check the note 6. So on 31st December 2018, a qualified surveyor valued the investment property at 5 million. It Well Ltd uses the fair value model, the IAS 40 investment property, to value its investment properties. Now, this 5 million here, that's the fair value at the end. Let's go and compare it the fair value at the start, which will be in the trial balance. If it has decreased, then it's a what? Fair value loss, which must be added to what? The operating expenses. So let's go and compare. So the investment property here, the value is 6,000 at the beginning. At the end, that's 4 to what? 5,000. So which must be added to what? Your operating expenses. However, assuming that this thing, the fair value has what? Increased from 6,000 to, let's say, 7,005. So I mean it has increased by what? 1,005. Since they're using the fair value model, it must be recorded as what? Other income. Agreed. That will be part of other income. So let's take note. If you go to finish hard and work hard, you can get the same thing there. Finish hard and work hard, the same thing is there. That one was a gain, so you add it to other income. So there's a loss of 1,000. So fair value loss on investment property. In fact, this figure is supposed to be positive. But, fair value what? Loss on investment property. And you do your workings. Open a bracket. 6,000 plus 5,000. Close the bracket. 1,000. Put it here. Now they are doing something that we are done. Or it's stored. So there are items again. Wow. So I think that's all. We are done. Great. So what do we do? We have to sum them up. So now let's sum them up and get one figure representing the operating expenses. This what you get, friends online. Great. Yes, the grants amount is 10,000. Good. So 67,000. It's not going there. 67,000. 780. Can I write it somewhere? Yeah, let me write it here. But I'm writing it 67,780. Agreed. Bracket workings number 3. Good. You put it in brackets so that we can get the operating profit. Hey, sorry, that side is not coming. So let's go and then put it here. So that's operating expense, putting everything together. Good. Putting everything together. Putting everything together. Great. Okay, so now let's continue with the game. Now, after operating expenses, we'll finish right. Yes, we'll finish right. What is the next section? That is operating profit, right? Operating profit. Operating profit. Operating profit. So we get something like 71,000. This figures 71,000 less 67,000 780. Like that. So 3 3. Okay, 3220, right? Good. So 3220. That is the operating profit. That is the operating profit. Great. Now let's move on with the game. So what's the next section? The next section will be what? The other income, right? Great. Now let's go to the other income. So let's go and calculate the other income. So other income is our next workings. Other income is the next workings. Right, for other income, we will finish right now. Other income. So that's workings number 7. Agreed. Workings 7. So workings 7, other income. Workings number 7. That is other income. Okay, so working 7. Other income. So the other income includes what? Investment income, interest received, then rental income. So let's see if there's any other income in this trial balance. So let's start from the trial balance first before going to the footnotes. So from the trial balance, all what you have to do is let's search. So there's rental income of 1,200. Rental income of 1,200 from the investment property. So rental income of 1,200. So I'm going to record that. Now there's grants. The portion that must be released to the income statement. That's a note 5. The grant of 10 million. If you are going to amortize over 5 years. So every year portion must be released. So 2 items. The first, don't forget the 3 bills. Then write rental income, which was 1,200. Then grants. Open a bracket. Divide the 10,000 by 5 years. Because the assets will have a life of 5 years. So therefore, what do we do? So we get 2,000, right? There's no profit on disposal, right? We had a loss, so we accounted for it, so we are done. So therefore, the other income will be 3,200. Is there any other item that we have to include? Is there any other item that we have to include? Great. Let's confirm the total for that of the operating expenses. I'm getting 41,780. So kindly confirm the total. Just have cleaned it here. Confirm from your end. first. When I sum it up, in 41,780. Great. We mention all the items in the operating expenses again. First, we say per trial balance, we have a figure of 22,400, right? So that was our first item, 22,400 plus. Second item on the list was the reversal of the 12,000, right? The reversal of the 12,000, that's the dividend. So less 12,000. Great. And then before we went to the trial balance to pick the items in the trial balance. So plus that of 6,000 auditors fee plus directors fee of 4,000, directors fee of 4,000 plus a bad debt of 2,000, and then we added a grant of 10,000, 1, 2, 3. Then we went to the provision for bad debt. Then we subtracted what? We subtracted 11620. Good. Then we continue the game. We added the loss on disposal of 1,000 to it. Great. Then we again added a revaluation loss of what? 7,000 to it. That was the last figure that we added. And what again? There was a loss on disposal of 1,000. Agreed. So loss of disposal of 1,000. So I'll bring that 1,000. Great. So for 39,780 confirmed. So I'm getting 39. $780. So basically, I'll get 39,780. So just change it on the 39. But the good news is that the answer just have to add 1 zero to it. That's all. Just add 1. So to increase the operating profit to 31,220. Great. So now we can continue with other income of 3,200. Great. So the operating profit before interest and tax will be profit before interest and tax will be so 420 and then 4,300. So 34,100. 404.20. 34,420. That is it. That's the profit before interest and tax. So interest or finance cost. So interest expense. Now let's go to the trial balance. How do you take the interest expense? From here, I'll be very fast to clear this one from the way. Now the interest given to us, we have 20% debentures. So debentures, we just have to find 20% of the 10,000. Even though the interest that they paid is 500, that means they are owing 1,005 in a trial balance. So the debenture interest will be bracket 20% times the 20 and the 10,000. You get 2,000. We take it off. You get 32,420. Now, this they've paid only 500, which is shown the trial balance. So are they owing? Are they owing? They're owing, right? They're owing 1,005. So let's go to the current liability. In the financial position, let's go and record 1,005 there. So kindly record it for us. So let's go there and put 1,005 there as what? Current liability. Why? The interest that they're supposed to pay is 2,000, not the 500 that they've paid on the trial balance. So the difference must be a current liability. So let's go and put it there. Good. So we are done. So financial position, by the time you finish, you left with only one workings or two. Only one or two. Retained earnings and the PPE setup. That will be the only workings that left. Now go to the same financial position with the non-current liability and record debenture, then 20%. So write the 20% debenture and put the 10,000 there in your financial position. So go to non-current liability. Let's go to the non-current liability and you put 20% debenture. Non-current liability, 20% debenture. Non-current liability, 20% debenture, which is what, 10,000, right? So let's fill in the column. And the exam condition, by now they'll tell you get ready. And have you seen how we are solving it? Good. So that we won't come for it again. Okay. Now let's continue the game. So what next? This is the profit before tax. Then we are done with the P&L. And that's the end of the game. So we call this one profit before. I hope everyone has included the non-current liability of 10,000 and the current liability of 1,005 as interest owing. Can we do so? So profit before tax. Now let's go to income tax expense. This income tax, I like this. This section 2, they have informed me that you are the best. So workings number 8, right? Income tax. So workings number 8, call it income tax expense. Income was tax expense. Good. Don't forget the currency, the 302. What do you do next? All what you have to do is just tell the examiner that the income tax is nothing by C, U, or O, and the D. So they have don't trouble, leave it empty because you see and then it's over, you'll be in trouble. So what's the current year tax? So it's given to us either in the footnote or trial balance. Let's count the trial balance first. I think we saw something like that. That tax computed on taxable profit. It's in the trial balance. Tax computed on taxable profits. That's 18,000. Cool. So tax computed on taxable profit is 18,000. Now let's see. So I'll call it tax computed on taxable profit 18,000. So I'm going to look for the under or the over and go to the fair tax. Then we are done. In this question, realize that but the tax paid was 12,000. The suspense was the tax provision for last year, which is 14. So there was over of what? 2,000. We can put it here. Over tax provision of 2,000. Over tax provision. Open your brackets. Tell the examiner that the 14,000 less 12,000. That will give us 2,000. Put this in brackets. We are done. What level is the provision for deferred tax? So deferred tax. What do you have to do? You have to go and provide workings. Let's go and do the workings on deferred tax. So that's workings 8. Workings what? 9. Yes, this sounds like you are. Workings what? 15. Workings 9. Deferred tax. Now, don't forget the currency. 3 zeros. What you have to do is, but the thing has come back again. I sit down and write. Sometimes I stand when I stand up. So workings 9. Let's see if it's true. Deferred tax. Don't forget the currency. Opening balance. Did you see deferred tax no trial balance? No, we didn't see something like that no trial balance. Let's go and see again. So I will quickly wrap up. Time. Just give me 5 minutes to complete everything. No deferred tax here. Great. So that means opening balance, cash. You go to closing balance. We said that the closing balance relax compare two items, the tax base and accounting base of the assets. So let's go to the footnote and go and pick that one. That's note, the last footnote. Tax base of some assets was what? 380, while the accounting base. Sorry, hey, trouble here. Trouble here. Okay, the accounting base of some asset 380. No, I don't want that to happen. I want this place to be 360. So let me make the last changes here. The last changes. Because the marking scheme that's right. We use that one. Okay, so let's go back to this one must be 360. This another must be 380. That's all. So we are done. Now let's continue the game. Okay. So saved. Okay, let's see. And let's continue the game. So this is how this accounting base of some assets is 360, while the tax base is what? 380. So what's the temporal difference? 20 million, right? So you find the difference between these two. The tax rate is 25%. Now, which of this figure is lower? Is the accounting base, right? The accounting base is lower. And if the accounting base is lower, is it taxable or deductible? The accounting base is lower. Good. So let's see. So open your bracket. Tell the examiner that the answer is 360,000 less 380,000 times 25%. And that will give us 2,500. This one is deductible, as the name suggests, deductible because the accounting basis was lower. And deductible means it's a deferred tax asset. So once it's deductible, that means let's subtract it. Deductible. Put deductibles in brackets. Open balance is 0. So the question is, what should I do to 0 so that I can get a closing balance of negative 2,005? That means I have to subtract 2,005, right? Before I can get this. So minus 2,005. So that's the P&L. That's the balancing figure going to where? Income tax expense. So I'll come here and put the 2,005 here as it is. 20 seconds. Good. Okay. Great. So put the same figure here. So 2,500 negative. We are done. Now, what's the total? So 18,000 less 2,000. I'll give us 16,000. That's 2,500. That'll give us 13,500. Agreed. Agreed. Will be 13,500 plus 18,000 less 2,000. 16 plus 2. That's what 14. So 13,500. Good. So this one taken to where? P&L as the income tax expense. We are done. And this is how far. So here, since it's deductible, add it to your non-current asset, this figure. Add this figure to non-current assets. So go to non-current asset after the investment property. In fact, the investment property, you can also record it. So let's go to non-current asset, record 2 items there. The level 1, the last item. That will be your work. You balance it off. If you're not balancing it, you're not sleeping today. Okay, so the income tax coming from workings number 8 happen to be 13,500. Put it in brackets. Great. Then finally, go to the financial position, the non-current asset section. First item, record property, plant, and equipment, PPE. So let's go to the financial position section. Let's go to non-current asset. First, we said leave how many lines? 5, right? The first one among 5 will be the PPE, so property, plant, and equipment. Leave it empty. That's the last working that you should do. If possible, you can even leave it out and strike differences. Then 2, record the investment property, the fair value that we use in the footnotes. So let's go to, that was one of the notes, that states that note 5 or so. That's note 6. So investment property, then record what? 5 million there. So investment property, got the fair value at the end of the reporting period is what? 5 million. That will be 5,000. Agreed. We put 5,000 there. So can we do that? Now let's go to the next line. That's the next asset, right? Deferred tax asset. So the next line is right, deferred tax assets. So the deferred tax asset, you record the 2,500 there as deferred tax asset. So let's go and do that. So therefore, in short, the non-current assets now there are 3: PP, investment property, and then deferred tax assets. That's all. Now, what's the profit after tax or profit for the year? Anti-part. So 32,420 less 13,500. So that'll give us 920, right? Another 9 again, eh? 32,420 less 13,500 less 13,500. So 18,000. Okay, so 18,920. 18,920. Now you go to other comprehensive income. So other, that side is not coming low. So let's see. Other comprehensive income. Can align it here, but there's no figure there. So it's dash. This question, there's no revaluation gain, right? You had a loss, so it's dash. What's the total comprehensive income? It's still the same, 18,920. Total comprehensive income. And that's the end of the game. Now, let's come to the trial balance. Any item that is not tied, that means they are free. Just leave them and put them there. Realize that you've touched almost every figure in the trial balance. You left with only 2 workings, and you're going to do it for me. If you put that answer in, it will balance. Now let's go to the equity section. In fact, the changes in equity, all what you have to do is this. Let's record something, a change in equity. I think I'll do that one here for you to end it. So that you do only one. You do only one. Oh, sorry, I think it's one. Let me just change in equity here so that you do only one. Okay. Do one for me. Then we are done. So let's see. Changes in equity. The one that you prepared. So let's balance it up here. Your only one item reflected there. Yeah. So first, you record the name of the company. In fact, we did that too. It's Well Limited. It's Well Limited. So changes in everything. Let me see now. Like 30 something like so. Now, nice. So statement of changes in equity for the year ended Good. 31st December 2018. Here, you should know the equity items. They are about 4 in number. 4 equity items. What are they? First, we have what you call stated capital, which is made up of what? Ordinary shares or preference shares. Ordinary shares is also called equity shares. So you see one of these in the exam question. Either stated capital, either ordinary share, or equity shares and preference shares. So let's go see this question. What do we have there? So how you have to check it from the trial balance. I think this one I used equity shares. Okay, let's see. Okay, so here ordinary shares of 25 pesos each. The value is 40,000. So ordinary share. Have ordinary share here. So I'll record it here. Ordinary share. Ordinary shares. So I'll put it here. Then check again. From the started capital, the next item I have to look out for is the retained earnings or income surplus or accumulated profits. Whichever one the examiner use, record it. Don't change it to. So retained earnings somewhere, I think it was the last one, right? Normally I stated last. Good. Retained earnings the last but one, 10,700. Good. And then we have revaluation surplus. So there are only 3 equity items here. So there will be retained earnings and the revaluation surplus. When you are done, then you put a total here. So this is the change in equity. The revaluation surplus is also called capital surplus. So the capital surplus too have to bring it. Then we call the opening balance. So what are the opening balance? This one was 40,000, 10,700. Evaluation surplus was 6,000 or so. Yeah, revaluation surplus 6,000. That's the opening balance. Great, 6,000. We put a total. So this one will give us 46,000, 56,700. Then now, when you come here, you check for issue of ordinary shares. This question, there's no issue of ordinary shares, so nothing goes there. You check for profit made for the year, so anti-parts. What's the profit made for the year? 18,920. So dash 18,920. Dash 18,920. Is there any dividend I've paid during the year? Yes, there's a dividend paid of what? 12,000. The one that we reverse it, come here. The dividend. Dividend is what? 12,000. And put it in bracket. In this question, we are done. But sometimes other items such as errors, error period errors, any mistakes coming from the previous period, that means this opening balance is wrong. Yes. Mistake committed in 2017 or 2016, it will render this opening balance to be wrong. You have to adjust that. You can see that in Payables Limited, question 10. Payables. Then the next item is revaluation gain. If there's a revaluation gain, can you bring it under the revaluation topic? Just that in this question, we had a loss. We are not going to bring it. That's all. We are done. So on that note, just put all of them together to get a closing balance, which will be taken to the financial position. So ordinary shares 240,000, nothing affected it. There's no issue of shares. You sum all this up, what you get 10,700 plus 18,920 less 12,000. Those will give us 6920. 6920. So that will be 17,620. Agree. Putting all this together, here also give us 6,000. So can we get a total here? Here to be 12,000 negative. So these are the closing balances. So these are the closing balances. They change negative. So when you go to the financial position, equity section, record this one there. We are done. So for equity section, you write ordinary share, retained earnings, evaluation surplus. Then what do you do again? You write the closing balances, the closing figures. There. Then the total. If you have this total here, just look to that. I'm going to put it there. You are done. So on that note, we are done with everything. But we have recorded everything except one, the BP. So I'll allow you to go into the BP schedule, add it to it. If you add all together, it will balance nicely for you. So that's the section that you are doing for me. As soon as you are done, forward it to me before the deadline is, then you can continue. But let's say 12 a.m. Then so let's say early morning, tomorrow by let's say 7 a.m. You can forward it to the balance. If there's no balance, please don't forward it. If you forward it, I'll forward it back. So if you send it to me and I send it back, that means and deadline is 7 a.m. If you send it 8, I'll forward it back to you. So if you send it, I'll forward it back, that means either two things. That deadline or the no balance. So that's all. Then we are done. Balance nicely. It means that as soon as you finish with this, at least you perform about more than 60% of the financial, the balance sheet items have been posted or treated. And that's it. So now we are done. That's the end of today's section. And that's the end of profit and loss preparation. Good. I promise that I'll go to some of the footnotes, but time will not permit us to continue. This is how far the good Lord will bring us. But all the questions, we've solved them. So success has been solved. Video available. It's well, we've done it. Video available. Question 3 in Puntio solved. Video available. With their together with their solution. So soft solutions. So now that you can now pick the full solution and go through. You can now pick the full solution and go through for all the questions. Once you pick them, how to treat them. Try 3 questions on your own without looking through the answer. Make sure that you solve them. Good. So after that, then you go to the tutorial question. Now there's no solution. Tutorial question, no solution. Tutorial question 1 is there. Question 1 is there. Question 2 is also there. Tutorial question 3 is also there. And when you go to tutorial question 4, even though you can see one there, it's tutorial question 4. That is, we are done limited. We are done. So that suggests that we are done with profit and loss. So that one is yours. That one is video available. I'll forward you the link to that solution. We are done. Then the next one is finish hard. Finish hard. That's tutorial question 5. Finish hard. Down to solution available. Then tutorial question 5. Okay, from there you go to 7. That we number things. From there, let's go to 6. So Ajinkwa, I think Ajinkwa to solution available. Work hard. No. Then question 9. Ajinkwa again. Why? Then question 10. Quadra so limited. This one here says video available to the solution. So basically all of them. So the question 10 are 2, right? Wow. Fafaha limited. Then the last question is your trial. Please, you are trying the last question. Question 11. Question 11. You are trying question 11. Very last question. Please, the last footnote, put 11,000 there. You are trying question 11. So question 11 is yours. The last footnote, you put 11,000 there. The last footnote, you put 11,000 there. So it's like the net reserve value of the inventory is what? 11,000 after that date. So it's 11 million. So it would be 11 million. So Ghana city of 11 million. Full stop. Great. So this is how far the good Lord will bring us. If you do have any question, can you let me have them? Great. So thank you. Come in. If you have any question, can you let me know? Can put it on the comment section or pick it up and work with it.